let's talk about the other KPIs, right? This is the thing that makes it actually all work, right? Rent collection numbers, rent collection at 98.4%, average rent for property at $1,361, current properties under management, 4,925, getting close to that $5,000, that 5,000 figure, DC. I know that that's been a long-term goal. As we go through these numbers, I just kind of want to start with like, why is getting to 5,000 properties under management such a big deal for you all?
Well, for us, what it does is it creates consistency within our entire organization. This vertically integrated approach, we think is great for you and for your investments. But at the core of it, it's great for JWB so that whatever market comes to us, whatever real estate market gets thrown at us, we can just pull a lever a little bit and adapt and thrive. And when you have about 5,000 properties under management, you have a significant source of revenue that comes in that's not dependent on home sales. And actually, as you go into a recession, property management companies and those that have, call it 5,000 properties under management, are in a position of strength. Because if people can't or don't think that they can sell their homes because of a recession, well, then they look to property managers, and it's typically easier to grow your properties under management. So this is what we call a countercyclical part of our business, which was a key strategy for us to do many years ago when we opened up our property management to accept, clients who did not buy properties from us.
That decision was made like 2014, right?
Yeah, I think it was a little bit later than 2014. I think it was 2016, 2017.
2016, 2017, 6-7 years in the making of getting into this counter-cyclical kind of activity, because you have the answers to the test, you eat your own dog food. To me, the other beauty of the properties under management piece is economies of scale, right? Like purchasing power, manpower in your neighborhoods that is able to like handle anything and be out there. I think that is the source of the data flywheel, right? Like if you have the more data points of something similar, the more compounding advantage you have based on data. And I feel like that critical number is huge. The other thing that really sticks out to me, because rent collection to me at 98.4%, that's what you've always had as long as I've been here. That's how it happened during COVID, during COVID. But average rent for property, man, like I feel like when we first started this show, average rent for property was probably closer to about $900 3 years ago. Is that about accurate?
I think it was a little bit more than that, but your point is definitely valid, right? I mean, rents have gone up in our portfolio just like they have in all of Jacksonville, right? And again, this is why you invest in this asset class, right? You can win so many different ways. That's why we have these 5 profit centers. And so our clients that have been owning properties for a long time have not only seen home price appreciation, they've seen significant rent price appreciation.
There you go. All right. So more KPIs here, right? Total houses rented through February 2023. This is new homes that you brought to the market and you put a tenant in, a resident in. 198. Average duration of initial lease, 27.1 months. So still well over the 2-year mark as an average duration of initial lease, meaning that you're getting a bunch of these 3-year leases as well as the 2-year leases. Number of leases re-signed, right? This is the keeping your resident inside the home and avoiding a turn. Renewals, 261. That is how you overpromise, underdeliver on expectations. And eviction percentage of 0.18%, almost negligible.
Yeah, and I just want to give a shout out to our entire team, which goes into supporting why people re-sign their leases, and specifically our property management team. Our property management team just set a world record last week and re-signed 71 leases in a single week. I mean, that's 71 properties, 71 clients, give it, that are having thousands of dollars that they do not have to spend when it comes to, lost rent or tenant placement fees or cost, right? These are the things that can make your experience great if you work with a vertically integrated provider who challenges themselves to set world records and re-sign dozens and dozens and even 71 leases in a single week. So that's the type of commitment we have to that.
To me as an investor, I'm looking at a tough economy where people are making tough housing choices. And I look at these numbers of performance, and this to me is my asset is doing fine, right? You guys have like a high performing machine that is able to get butts inside of rooms of houses. And if I'm thinking of this as, well, where do I put my money going forward? I think of, I want to put my money into something where I know that the fundamental piece, the idea of occupancy, like in rental properties, for it to perform, occupancy is the data point.
Mhm.
In the stock market, for it to performing, profitability is the data point,
Right.
right? Like, am I more certain that companies are going to be able to hit their profitability numbers in uncertain times versus people being able to get into these workforce homes during uncertain times? To me, these numbers are what tell me as an investor, yes, this is safe, this has a high floor, and it has likely upside based on everything I'm hearing.
Yep, absolutely.
Okay, cool. I'm glad you agree with me. Makes me feel smart. All right, so the current inventory overview, right? So purchase prices are now somewhere between 180K to 280K. And that feels like it's significantly up from when we started the show.
Definitely from a few years ago, for sure.
And IRRs at 14% plus. That sounds incredibly attractive in a world where, people will do anything for 9%. Mix of renovations, new construction still on the market, right? So you can still get new construction, you can still get renos. Properties, right now, you're only selling properties finished with construction by date of close, which is a change from last year where you could have had like a 6-month waiting period. At this point, you are going into a cash flowing asset because it's finished with construction. You're going to have a resident in there, and 67% of available inventory is already rented. What does that mean?
Yeah, and I wanted to give everybody an overview for those who are thinking about adding to their portfolio now or really over the coming, months and quarter. What you may have not seen, but what we have been doing behind the scenes is building out a lot of inventory, making sure we have a runway for you all, and then working our very best to slowly increase that percentage of inventory that's rented at the time that you put it under contract. And so and this is a part of this experience that we want you to have, right? It's great if a home is rented when you put it under contract. It's okay if it's not. That's normal that it's not. But if we can, work this inventory through our process and have a high percentage of it being already rented, well, this is a great time for you to take advantage of that. This is what we've been working towards internally to improve the experience. And so that's kind of where we are right now. 2/3 of the available inventory is already rented, cash flow positive from day one. And again, a great way to walk into your next rental property.
Cool. And we're about to get into the Q&A section of it. Great concerns in the chat. So Derek, anonymous attendee, Marie, Lee, Ken, we're going to get into your questions right now. Mike Foster, Chris Gonzaga. But I think we would be remiss not to talk about the incentive that's still in place for a limited time, $10,000 in incentives through the end of March. GC, you want to explain this stuff?
Yeah, and this is really critical. We're getting into, it's already March 7th here, and this incentive is going to end on March 31st. This is the largest incentive package that we have ever offered at JWB, and many of you on the call here have taken advantage of it. And I think it's really something to pay attention to. When we talk about how we get to 14% plus IRRs, that's assuming you take advantage of these incentives. The IRRs would not be that high if this incentive was not there. This assumes that your interest rate is going to be at 5.5% around there. And that's because JWB uses this incentives to buy down your interest rate for you. So a much better time for you to be purchasing right now due to this incentive. And it's going away in a few weeks here. So it's about $10,000. The way that that's broken down is JWB is paying 2% of seller concessions, which comes out to about a $5,500 value of cash you just don't need to bring to the closing table. JWB covers that for you. JWB is waiving our first tenant placement fee, which is worth about $1,500. And then JWB is paying the first $3,000 of costs. You can call this a cash flow credit. Most of the time, clients are using this towards your maintenance costs. And so the first $3,000 of maintenance costs that come during your ownership, no expiration time on it, that first $3,000 is going to be on JWB's dime. A fantastic way to walk into your first or maybe your third or fifth or 10th rental property with us.
There you go.